Assalamualaikum and hello. My name is Nur Fatia binti Muhammad Sofi. My meeting number is A20A1817. So today I will tell you the introduction of this topic. Islamic finance is founded on Shariah principle, the Islamic legal system drawn from the Quran and Hadith. According to this approach, financial instruments such as structured product and derivative are created to be Shariah compliant. Avoiding interest, which is riba, uncertainty, gharar, and investing in business that engage in prohibited activities are the fundamental principles of Sharia compliance.
Hi, my name is Wong Sijit and I'm gonna present about the types of instrument in the Sharia compliance structured products. The first one is derivatives and options, which investment in this instrument provide hedging benefit to fund. They also used to manage one's exposure to today's volatile markets. And the second one is equities, which means a small portion of the investment invested in equities to achieve capital protection while trying to take the boost of the value. And the third one is cash and money market. It will provide liquidity of funds. Then the next one is fixed income securities. It provides that the products are designed to offer such as capital protection, where normally sukuk is the main fixed income in Sharia compliant instrument that's available in the market.
Assalamualaikum, my name is Shariah binti Ahmad and now I'm going to present about Islamic money market. So, Islamic money market is an instrument available for retail investors as well as for the Islamic financial institution to manage their liquidity. So, it includes tradable Islamic financial assets such as mudarabah, musyarakah, murabaha, istisna, dan salam certificate. So I will explain more in the next slide. So now we will go detail about tradable Islamic financial market. First type is murabaha certificates. This represents certificates of permanent ownership in a project or company where the holder is not entitled to exercise management, control or voting rights. Second is musyarakah certificate, represents certificate that entitle ownership or project, temporary project or ownership or company. The certificate may include or exclude management control or voting rights. So the third one is other certificate, which is murabaha and istisna. Are debt securities arising from standard istisna or murabaha contract. This certificate originated from debt, thus limiting the tradability or the certificates on the secondary markets. Ijarah suku is a certificate backed by lease agreement of land, building or equipment and underlying lease payment, which determine the return on the sukuk certificate can be fixed or variable. And hybrid sukuk is underlying asset of hybrid sukuk consists of assets rose from ijarah contracts and forcibly istisna and murabaha. And the last one is salam certificate. The securities arise from salam contracts which require prepayment for the future delivery of a commodity. So that's all for me. We will go to the next presenter.
Hi, I'm Shafika, 80817. Now I will tell about applications of Sharia contract in future and options. Firstly is about the instrument that comply with Sharia are used to create derivative using future and options. Okay, we know that for example, the Sharia contract is tawaru by Al-Ina, by As-Salam and others. So a derivative means about the financial instrument and its value must depends on underlying variable. Main points, derivatives is used derivatives to protect value risk, negotiation or any speculations. Okay, next. Now about the Sharia concept in derivative. Before that, I want to tell about the issues that happen in the different factors, which is the product by Al-Tawarruq, right? Okay, the issues happen because relating the basic requirement in the contract, sell things that not exist and not belong to the seller, and after that, mutual deferral reduce contingency risk in derivative contract, but it also involve the sale of that for another. And next is exist uncertainty and element of gambling. This is about the issues that happen if not follow the principle of Sharia compliance, right? Okay, and for example is the concept Ba'ina and Tawarruq. For the Ba'ina, Ba'ina is concept buyback of the commodity or different payment with a price lower than purchase price. A purpose to get cash and must have two parties for the two transactions. And for the concept Buy and Tawarruq is purchasing a goods with a postponed payment and selling it to a different vendor at a discount in exchange for payment immediately. Purpose is to get cash or liquidity shortcuts and lights in the back enough, and must the parties, electric parties, and at least have transactions. This is about the differences between conventional and Shariah compliant futures. Firstly, I will tell about the Shariah compliant futures. Okay, at this point, tell about when we know that something or contracts halal and follow the Shariah compliance, because we can look at the contract based on profit and loss sharing principle. Okay, we know that everything we must follow the principle Shariah compliance, like don't involve riba, gharar, uncertainty, and others. This means follow the Shariah compliance. And this is, for example, product we can tell in the buy or sell. Buy or sell, we know that contract to buy or sell a commodity in the future at the price set to be and paid in the future, and means we have a product is exist. Okay, that is a conventional compliant futures. In the flow of the conventional, people can buy product but not exist. So this is not follow the Shariah compliance. And then selling non-priority goods, not belong non-priority, and involve uncertainty.
Assalamualaikum warahmatullahi wabarakatuh. My name is Shariah Najia binti Sharudin. My matric number is 82082104. Firstly, for conventional option, premium is not part of strike price. While for Islamic option, premium is part of strike price. Secondly, for strike price, both conventional and Islamic strike price are fixed. Next, the option is tradable for conventional option, while for Islamic option is not tradable. Besides, for conventional, an option can be on asset such as shares and commodities. For Shariah option, only valid for approved assets. For example, is Shariah compliant and commodities. Lastly, conventional option, both call and put options are valid, while only call options are valid. For Islamic option,
my name is Siti Azima binti Mahdi. My matric number is A20A1953. I will present 5.0 about future and option available in the market. Derivative products can be used to manage exposure to market volatility. Equity derivatives are derivative products based on equities such as stocks and stock indicators. Next, commodity derivatives are derivative products based on commodities such as oil, gold, and agricultural products. Financial derivatives are derivative products based on financial instruments such as interest rate, currencies, and bonds.
Hi, my name is Norazika. I will present about 5.1 General Understanding of Derivatives. Firstly is forward contracts. Forward contracts is cash market transaction where the seller agrees to deliver a specific commodity to a buyer. Second, future contracts. Future contracts is standardized agreements to buy or sell an asset at a predetermined price on a future date, and also exchange rate and standardized in terms of delivery date, amount, and contract terms. Third is reason for buying selling contract. Hedges. They buy futures contracts to lock in price and obtain protection against rising price. Speculators. They buy future contracts with the hope that price will rise further so that they can profit from rising price. And lastly is reason for selling future contracts. They have three reasons. First, hedgers use future contracts to lock in price and protect themselves against adverse price movement. Second, speculators buy and sell futures contracts in the hope of making a profit. And third, arbitrators buy and sell future contracts simultaneously on different markets in order to profit from small price difference.
In 5.2 presents about the future exchange. KLCI futures. First, price of share index futures. To get the contract value, multiply the forward price by the contract multiplier in Malaysian ringgit. Second, contract month and expiry date. 4-month contract, which is the spot month, the following month, and 2 quarterly months. Third, settlement. The expiration date is the last day of trading. 4. Hedging application of share index future. The process of hedging to replace transaction in the cash market. Managers can set future cash price by selling index futures contract. Next, CPO futures. Malaysia has 2/3 of the world palm oil export market, and palm oil future contracts as the most successful commodity.
Option in derivatives. There are three types. First type is KLCI option. The underlying securities are the KLCI and its contrast code specified by the exchange is OKLI. Second, individual share option. The exchange is looking forward to launching this individual share option contrast in the near future. And lastly, convertibles and warrant. Convertible security may be a preferred share or loan issue that can be converted into ordinary share at predetermined ratio and price. And warrant is an option to allow the owner the right to purchase a fixed number of ordinary shares at a predetermined price.